Economist at Mizuho Bank. He, however, believes that volatility in the Indian markets will continue for the next 1 or 2 years. Here's an excerpt of the conversation.
I think India is in a very sweet spot for several reasons. I think one of it is really the external landscape. We've seen oil prices slumping, which means that in the BRIC pack, Russia is not doing very well, Brazil is not doing very well. That leaves India and China. And China is struggling with structural issues as well as a host of other volatility issues. Whereas India's growth is now projected to overtake China sustainably over the next few years. So it's not a one and done deal, and that's why it's good. Secondly, I think PM Modi is also setting up the very, very fundamental base for Make in India. And that is where the opportunity really lies. And we do see that on the ground, where a lot of the corporates are interested in setting up bases there. So it's really about getting the connectivity going. And that would really be the big boost for India, because I think India still has got the low-hanging fruits of industrialization yet to be exploited.
Yeah, fair enough. The Bihar elections, of course, were a little bit of a dampener when it comes to the overall market sentiment. Markets have, of course, tried to recover from the jitters, but do you believe that that will play a role in dampening investor sentiment in the near to mid-term?
To be fair, I think investors would be a bit more cautious. I mean, that goes with the territory, because they want to watch how the next few elections pan out and what it means for the Raj Sabha. But given that PM Modi was very good about it, he came out with some further FDI liberalization, that shows, or at least it brings across the sense that the reforms are still underway. So it may be a more arduous path to get towards where we want to, particularly with the land reforms. But there are still other areas to be exploited, and I think investors are not totally disheartened, especially in a relative sense. EM is not doing very well to begin with, so India is a relative bright spot.
Okay. Markets, of course, have reacted to the elections. Several areas, from currency to, basic commodity jitters that we've been seeing. What is your overall, if you look at the short to medium term in the next 1 to 2 years, when do you see Indian markets stabilizing? Or what are the levels that you think we could hit, keeping in mind the macro situation with respect to the Modi government?
Well, I think in the next 1 to 2 years, we probably see a bit of undulations. Firstly, I think in the next 6 months, you'll probably see the rupee more likely to weaken than strengthen. But to put that in perspective, I think many of the Asian currencies would weaken even more. Where the rupee has got relative stability is the fact that it gains from the low oil prices, and also the fact that FX reserves has been built up. So India's FX reserves, compared to the taper, are now almost 30% higher. Just as a contrast, Malaysia's is about a third lower. So that is the relative positioning, and India's imports cover is also solid, over 10 months, versus Malaysia struggling with 6. So on that basis, it would weaken. That's along with the trend, but then it's in a good position to pick up again. But we don't see the rupee rallying too much, because I think the RBI is going to take a balanced view of this, and they are going to allow for some reserve accumulation and temper the rupee appreciation. But that fits very well into the Make in India policy.
Here's a chance for you to be a part of India's biggest investor summit. Remember, you can answer a very simple question to win an invite to the CNBC TV 18 Investor Summit. The question that we're asking at this hour